Welcome to the Today's Money Masters. I'm your host, Jean-Paul Menou. The Today's Money Masters competition comprises 3 professional investors and a novice, each provided with $500,000 to invest. The participants will invest in stocks, bonds, and collective investment schemes. They will share their strategies over a 1-year period, at the end of which the top portfolio manager will be declared. So let's continue with the masters on this very exciting journey. Now, a word from our sponsors.
Have you ever been interested in an IPO but didn't have the time to go in branch and submit all the documents? We've got a solution for that. With NCB Capital Markets Go IPO portal, you can submit and track your IPO application from any of your favorite devices. No need to go in branch. No need to contact a wealth advisor. No extra fees. And it's accessible to both NCB and non-NCB clients for all our offers. So no excuses. Investing is easier with Go IPO. Visit www.goipo.jncb.com or text GoIPO to 876-383-1729 and start investing today.
On today's program, we are joined by André Yapp, one of our professionals. He's from the Credit Union Fund Management Company Limited. How you do?
Not too bad, thank you.
Good, good. André, MailPac seems to have been doing pretty well financially recently. Why didn't you look at them for one of your stock options?
I did look at them. However, liquidity constraints prevented me from investing in MailPac, as I'm sure some of my fellow competitors may have done.
Okay.
So when I looked at the company, I personally would have invested if I had the liquidity to do so, but unfortunately I did not. I think I'm probably the most risky investor among my peers.
Really?
Because, yeah. I mean, when you look at it, I'm probably the least diversified among them in terms of industry. Pretty much all of my stocks are in the financial industry compared to everybody else who's somewhat spread out among different industries and so forth.
Okay.
And I considered MailPac to be a pretty risky investment just by the nature of the way that the IPO was there. So I wouldn't necessarily say it's an investment that's made for everyone. You know, I think you have to have a risky appetite to go into MailPac. Now, the reason why I said MailPac is somewhat of a risky investment is just by the nature of the disclosures that are made in the prospectus. And quite frankly, very little disclosures are made in the prospectus. There are no audited financials. What you get instead are essentially management financials. You get management projections. And of course, you know, there's a bit of a conflict of interest there when you have management projecting forward. So investors say, hey, we're going to make a lot of money, or we're going to make this money going forward. I mean, it's in their best interest to kind of say, we're going to do well to sell the product.
Right.
But yeah, I think it's risky in terms of the disclosures and just the way that the company is left subsequent to the IPO. So one of the key takeaways from that prospectus is that subsequent to the IPO, despite the company raising $500 million or thereabout in funds, in investments from the initial public offering, the company is essentially left completely uncapitalized after that. It has no retained earnings. The money is going towards the selling shareholder, which is half of it, about $250 million there. The remainder is going towards servicing debt. So really and truly, the company comes to the market, raised $500 million, and then it has none of that to show for it. A counter argument to that is really and truly, they said that half of the money is going towards paying off debt. So when you think about it, the company took on debt previously, made some investments, it bought systems, it perfected its operations, it did all of these things beforehand with that capital, and now they're paying it out. So in a way, it's kind of it's even keel, but really and truly, the company has no money left in its coffers right there if there are any substantial shocks going forward.
Okay.
Which there could be or there could not be, I don't know. So it's quite a peculiar one. It's very risky in that regard. And then when I said it came with essentially management financials, where it said it basically amalgamated the financials for the 2 companies that were previously. Actually, I'm getting ahead of myself. So when MailPac Group came, it essentially amalgamated the operations of 2 independent companies to form one company called the MailPac Group. These companies, they had different operations. So one was the typical shipping and logistics services, which were used to, you buy something overseas, you send it to the mailbox here, you pick it up here in Jamaica, you pay a fee, you pay your customs, etc.
Right.
That was one separate business. The other separate business was MailPac Local, which is, in my opinion, really great idea. Essentially, it's the way of shopping online locally. One of their key participants are partners there is PriceSmart. So a lot of people will use that particular service to say shop for their things at PriceSmart and have it delivered to them rather than going there in the line now in Christmas, where the line is very, very long.
Right.
So
we digress.
sorry, give them a bit of a plug there. But yeah, so they amalgamated those financials and they gave us essentially management financials. But the fact remains that those are two separately operated entities. They should and would have had audited financials, but they presented none of those to the public. So in a way, it's a private company kind of still wanting to be private, but at the same time get public investment.
Yes.
That rubs me the wrong way.
Okay.
That spells risk because you don't know.
Yeah.
They aren't showing you.
Makes
you
sense.
need that disclosure. There's a reason why you go public. You go public and you have to meet those disclosures, but somehow they didn't. So,
or they haven't yet. You think they will, or that's?
Oh no, they will going forward. Absolutely, will
right.
going forward.
Okay.
But in the prospectus, in the initial public offering process, that wasn't there. That bit of information was somewhat missing.
Okay.
And I mean, and they use a lot of the prospectus kind of had a lot of conjecture and opinion and anecdotal stuff. It wasn't necessarily really hardline facts. It was a lot of opinions.
Okay.
And everybody have an opinion.
Sure.
You, me, anybody.
There's
and
an
they have a right to
expression
an
about
opinion.
that.
There's nothing wrong with that.
Sure.
You know?
But I think it would be the convenience that the company offers is something that just looked so good. Everybody said,
yeah, I mean,
just jump right in.
Despite my hesitations and my reservations, the IPO was successful. It raised its money, right? So that's number one, to show that people are happy and accepted it, despite the lack of disclosures. Two, it's been selling now at above their IPO price. So it's selling at a premium relative to that listing price. So I think last week it closed over $2. It somewhat retreated this week. It's down to about $1.60 right now.
Okay.
Last I checked. So it's still above the IPO price. So it's still doing good despite my reservations, but these are things that people who have not invested in it or who are looking to invest in it might want to take a keener look going forwards when they're reading through the prospectus to see if they want to actually jump into the company now. If you're already in it, then I assume that you have factored in those risks and you have said, hey, these are great for me, I'm okay. Right. And right now, the price is showing that you worked out.
Okay. All right, good. Well, we'll keep an eye on that one.
Have you ever been interested in an IPO but didn't have the time to go in branch and submit all the documents? We've got a solution for that. With NCB Capital Markets Go IPO portal, you can submit and track your IPO application from any of your favorite devices. No need to go in branch. No need to contact a wealth advisor. No extra fees. And it's accessible to both NCB and non-NCB clients for all our offers. So no excuses. Investing is easier with Go IPO. Visit www.goipo.jncb.com or text GoIPO to 876-383-1729 and start investing today.
The Money Masters Funds. It's all about real growth, safety and security of your assets. The Growth Fund gives higher returns for the investor more focused on growth. Money Masters Funds, providing growth and security, performance and financial peace of mind.
We are CUFMC, Credit Union Fund Management Company. Trust matters, and you can believe in our reliability.
Service.
We give impeccable attention to your needs.
Experience.
Careful and prudent are part of our DNA.
Know-how.
After 70 years working exclusively for credit unions, now we're open to all investors. CUFMC, Credit Union Fund Management Company.
How we choose to invest our time today often has a propelling effect for what we gain tomorrow. It's like investing in shares.
Mommy, is this a share?
Yes. You know, she's right. It's similar to how shares work. Companies are publicly listed on the Jamaica stock market. These companies are divided into pieces, and these pieces are what are called shares. The owners of these shares are called shareholders.
That was André Yapp this week, giving us his financial thoughts. Thanks again. Join us next week, same time, for another exciting episode of the Masters Competition, as we meet with another participant. Follow the pros and the one novice each week on the Masters. Watch all of the shows on the Today's Money YouTube channel and listen and analyze the strategies with the masters on RJR 94 FM Thursdays at 8:45 a.m. as they challenge each other to stay ahead. Also look out for the portfolios in the Sunday Gleaner. The Masters competition is a product of Today's Money Limited, brought to you in partnership with NCB Capital Markets Limited, Money Masters Limited, Credit Union Fund Management Company Limited, and the Jamaica Stock Exchange. I'm Jean-Paul Menou. The Masters is another fine product from Today's Money Limited.